Good turnaround Tuesday, everybody. Hugo, Mary, Richards, Brian,
Morning, Dale.
Ryan and Kman. I tweeted out that Kman was going to talk about new highs in US dollar yen. And here we are.
Yes, sir.
So kind of strange. I don't know if the opening is going to confirm it, but 10-year is actually down almost 2 bips. So it's completely different picture.
Yeah.
So don't you think? I mean,
but there's the dollar aspect, and then there's the rest of the world aspect. If you look around at other yields,
they're outperforming our 10-year, aren't they?
Gilt yields are putting in a high. Canadian yields are putting in a high.
How about
Aussie
Euro?
yields jumped, but then came back a little bit after the RBA, but still on a high. Kiwi trying to move higher. It's not only the dollar yen; it's really this cocktail of yen versus the rest of the world, basically.
Yeah, I bet Blake will agree that the Aussie has some give back in it now after looking at this candle after the RBA. What do you think, Ryan? Some give back here?
Yeah, it's not looking good, is it? If you can't surprise with a 50 pip hike and sound hawkish and see your currency rise, you know you're in trouble.
Yeah, so at least maybe some kind of fib retracement, even if it's not new lows. I'm leaning towards that, I don't know if we'll get to the 70 handle, but anywhere between like 70 and a half, I'd take a stab at it. What's also is pretty interesting is the bipolar behavior in gold and silver. So yesterday gold was weak while silver was exploding up 50 cents, and today it's the opposite. And it's probably because we're on some type of important levels here at this week's lows. See this?
Yeah.
Yeah. So I mean, this is under this week's lows. It's like silver should really shine, to be trite, So and now we're under 4,100 in S&Ps. Risk off, or are the 3,800 guys going to be right? I don't know. And the bonds, almost new lows in TLT. I don't know how they're going to be trading today, but we're almost at a new low in TLT.
It's a bit funny in currencies because we see is not your risk on risk off scenario with the equity markets. Even if the equity markets are lower, yen and Swiss are on their weakest. Usually, if you do a risk on risk off scenario, the purest risk on off scenario in FX correlations would be that the ultra low yielders are gaining a bit of strength, and they are actually weaker, including the euro. Yeah.
So euro giving it back, but it's been a grinding. To me, it feels corrective since the high of the first run.
Yeah.
Because it's this kind, right? But this kind of action right here, to me, looks like it's marking time, and I'd be interested down here after the ECB, maybe anywhere between halfway back and 61.8, and the yen's making a new high, but this could still end up just being a failing rally in the dollar. So the dollar's really had the weakest response to yields increasing here.
Yeah, it's one of those ifs, ands, and maybes, isn't it? Waiting for something to happen. We're waiting for the ECB. That's going to be the.
Then they'll be waiting for the Fed.
And we'll be waiting for the Fed, and then the Bank of Japan, and the SMB. And
I'm tired. Tired of waiting. Tired of waiting. So tired. Tired of waiting. Tired of waiting for you.
We've always got you to sing to us.
oldie but goodie. So that's all I have. Can I say that I still think WTI is going to be a failing rally up there? I mean, there's no reason to be short crude, is it?
No, you can see that on that picture.
Yeah.
I don't get why it's so strong personally. I know obviously we've got the stuff going on, Russia and all that stuff feeding into the OPEC stuff.
Yeah.
But you'd expect oil to be booming with economies booming and everyone's heading towards recessions.
I know, and the reopening is the big deal. We had a guest here Friday, Michael Green, who actually, he's tweeted it, and I asked him about it. He said they can't reopen.
In
so
China.
I mean, I don't know what he meant, but they're shut down. So, this might just be a little reprieve, and then it's going to happen again. Is that what you think he means?
Hey, good morning, guys. And Dale, I was going to ask about that. About like, what did he mean by that? They're not going to reopen. Like, what? They can't reopen. Why can't they reopen? Like, what's?
I know.
What's stopping them?
Yeah, I don't know. That was a surprising thing. His answer was that he believes it's not just a COVID lockdown, that they're probably this is just a way for them to show control.
Yeah.
For whatever is going on in that opaque country. I have no idea.
I don't know.
I don't think anyone does.
That's kind of strange. So, as you said, Dale, like when you just a moment ago, like I don't know, there's like I don't know whatever else is going on. There's a few things that are happening. Matter of fact, I'm glad that Ryan and Kman are both here. And matter of fact, I think Stelios just got here from the motherland.
Hello,
Mr. Queen.
Chap.
Hello.
How's that, Ryan? Top of the morning, chap.
Yeah.
Sound British?
A little bit.
That sounds Irish.
Fakeish, a little fake Irish. Top of the morning to you.
So I want to ask you guys, and Stelios, since you just came back from London, and how was the concert, by the way? Seeing Queen.
It was like 100 times better than I thought it would be. So really, really good. Yeah,
I saw that it looked awesome. I saw the pictures and the video you sent over. It looked amazing. It looks like you had like pretty close seats.
Yeah, it wasn't front row, but it was damn close. It was. Yeah,
it was nice. Anyway, hey, I want to ask you guys, what do we make of this situation in the UK with Boris Johnson? Can you give us the skinny? Because the cable, I mean, I looked at this, yesterday. You obviously got past. Well, okay.
Let's see some real charts.
Some real charts. All right. Well, here, let me just talk about the price action here. In the sterling. And one of the things, we've noticed with the ForexAnalytix, just here in the community, is that we've had this here's the daily chart. I think this is a really good representation of like an inverted head and shoulder pattern, a flag pattern developing. You kind of got them both developing, which is interesting with this, no contest situation we have with Boris Johnson. And you can see intraday, we hit a new low, but we pop right back above those lows after probing that new low. So what do you think here? I mean, is this positive for the sterling with what's happening with Boris Johnson? And give us some clarity, because, being an American, and Dale and I are just stupid Americans. We definitely don't understand what's going on over there. We're uneducated, stupid Americans. So please help us out.
Well, as we've said, the impact in the pound hasn't been huge. Yeah, we've had some bit of moves here and there. The main thing is whether foreign investors see it as great uncertainty or not. Here, we don't care. This is part and parcel. It's not a big impact unless there's a general election. Even when the vote came out, got announced at 9 o'clock, cable didn't even move 20 pips. Okay. But it shows that investors may be coming in the morning, see the news, and think, "Oh, that's uncertainty," and they make the moves. But we've been talking. We think there's quite a few shorts in at the market right now.
Right.
125, 20, 30 area, probably a bit higher, more of the longer term shorts, let's call them that. And so if we get a break, potentially above sort of 125.40, we could see a little bit of a stop run. And then if it gets above sort of 70s, 80s, another push up there. But really, politically, Boris is on borrowed time. There's no mistake about that. History's shown us that when prime ministers who have survived a no confidence vote by a less margin than they would like, they don't tend to last long. Boris will fight tooth and nail all the way. He's not going to make the next election. And it's just a question of how the rebels now plot to get him removed between now and when he does leave.
Bring back May. Bring back May. Bring back. Just kidding. I as an American, I would go hang myself. Actually, I'm just kidding. No, but that's interesting. It's interesting that you say that, though. Like when I guess as a leader, if you get to a point where you just don't have a whole lot of support, why do you think that they just tuck tail and run? I mean, is it because they just politically can't get anything done after that, or? Yeah,
well, there's already talk now beginning about Brexit, because obviously Boris wants to potentially enact this Northern Ireland Protocol clause. He needs to get that through Parliament if he wants to do that. Now, if he's got half his government against him, he's not going to get stuff through. So this is where the rebels can now, turn the screw on him. Anything he tries to do, they can block him.
Yeah.
And if that continues, we've got a couple of by-elections coming up, and if he loses seats there, that's further pressure, and the rebels will then start clamouring again. So it just mounts and mounts and mounts, and probably, I don't know, a few weeks, couple of months, depending if we get bad news, we get a headline popping up saying Boris has resigned. That's what it's going to be like.
All right. Well, it's sad that I learn all of my I get all of my education about UK politics in the Netflix series The Queen. So that's as sad as it is. That's how where
I get it from as well.
I'm sorry.
That's where I get it from as well.
There too.
Blake,
Dale, I'm speaking to you as another, an educated American. You should really watch that show. It's such a fascinating show. There's so many historical events that it's obviously fiction or Hollywood.
It's your whole lifetime on Netflix, huh?
But it's cool, man. It's actually a really good show. Okay, well, anyway, I digress.
It's over 100, so got to find things to do inside again, right, Blake?
Right, exactly.
Blake, one thing I wanted to add, political uncertainty is always not good for a currency, but when things have gone pretty much from bad to worse for a prolonged period of time, as they have done in the UK, a change in leadership is potentially or could be potentially a good thing.
That's what I was going to ask that, and that's something that we've explored like in the chat rooms over the last week or so, actually last 2 weeks, when Ryan, you were talking about this, this no confidence vote, and I was like, is that going to end up being a good thing if Boris Johnson is gone? I mean, I'm asking, what do you think it could be, Stel?
The problem is who's going to replace him. That's the issue, and that's what's not clear yet. There's no candidate who's head and shoulders above the rest, or who looks like could do a good job. But in my opinion, it's my opinion. I think probably anybody would be better than Boris Johnson. But
you put a bowl around your head, and give yourself a haircut, and there you are, Boris Johnson.
What do you think, Ryan?
Yeah, what, about the haircut or about Boris Johnson?
About Boris Johnson, not his haircut. Is obviously his toupee is something that is only admired by Donald Trump. That's the only person that really admires his hair. But
we're making news here today.
But what do you think of what do you think of Boris Johnson? I mean, and his leadership style.
Yeah, I think he's sort of lost the plot towards the end. I liked him from the start. He was energetic, had a bit of gumption about him, put the right foot forward. But he just seems to lost the plot since then. He can't.
It's funny.
He's chased the tail.
Lost the plot. I actually said that to my wife yesterday, and I'm like, holy crap! I hang out with way too many people in the UK in my chat room. because I said something. I think I was talking about somebody that I'm like, they lost the plot, and I'm like, holy crap, did I just say that? Anyway, all right, well, fair enough. Going back to the RBA, so the Aussie dollar failed at the 200-day moving average. We've had this AB equals CD, bullish. Many of us played the Aussie, under 70 cents, played it on the long side. It was a really great long. I know.
Where are you buying it back, bro?
I actually started buying it this morning, like 10 pips ago. Yeah, I bought it this morning. Now I have to say that what's going to help the Aussie at this stage in the game is a couple of things. We need to see the equity market stabilize, but the equity markets are just hanging around this 4,100 level. I mean, this is really, like, if you look at, let's just go backwards, go back a couple of days here. I mean, we've been trading down here, at these levels since last week, and you can see that we pop back. By the end of the day, we pop back up, and it is turnaround Tuesday, right, Dale?
Yeah,
seeing it for us, baby. No,
just might want that blue line.
Yeah. So, well, I mean, it's possible, but just realize this has been a pretty key, breakdown point, big level for a while. So anyway, if the S&P can get back above there, I think that the risk is that the Aussie could move higher again. Just everybody will take a step back and say, well, the RBA did raise rates, and I thought they were going to keep to their really weird interest rate increments. I thought they were going to go up some weird increment, but they actually raised more aggressive than we thought. And the Aussie, popped back up, slammed back down. But I think that's more of a situation of maybe positioning. But I look at the Aussie, and this is the one that really scares me a little bit, is we have the Aussie yen that actually did a little false breakout above these highs. And even though the yen continues to be really weak, the Aussie yen I'm watching very carefully, because if we do have a negative close here, that's going to be a nice reversal just in general. So that would be something that we'd have to watch by the end of the day if it really, closes lower. So that's something that I am paying attention to. Do you guys have anything to say about the RBA other than they hiked rates and they hiked them more aggressively than a lot of people thought they would? Do you guys have any opinions? Kman, maybe you do?
No, yeah. The only thing I can see is that according to local commentators over there, is that they didn't really, they are not very impressed by those hikes, because it's purely due to inflation and consumer confidence data. Other data they are showing, housing data are showing a weakening. Things are starting to weaken over there, so they were only half impressed by the rate hike. And again, I would like to say, like, it's an old record of mine. It's not because you raise interest rates due to inflation that your currency will strengthen de facto. So I think there's a lot of that in the Aussie. It's like the rumor they could hike, they hiked, now it's done. Now we look at the data, and the data are not telling us a very supportive picture. And what I would like to add is that there was this headline somewhere that the traffic in the Chinese Sea around Shanghai is back to 95% of pre-lockdown numbers, which is high. Yet CNH is not strengthening either. So there's a bit of uncertainty there as well, and that might as well filter through in the Aussie. As per correlation.
That is interesting, and usually, I mean, the CNH, this is one of those currencies that is, if risk appetite is going to improve, especially with China and with the Aussie dollar, you would tend to see the CNH strengthen a little bit and the pair drop. But yeah, we are seeing a bit of a reversal here. I think that's a great point that you bring up, Kman. So thank you. But let's shift gears a little bit to the ECB. or I'm sorry, did anybody else have anything they want to say about the Aussie?
I just wanted to add, because we were talking with Dale about the dollar yen. I just would like to say that I went flat today, because not due to the MOF, but a few vague Kuroda comments, and then the speed of this move is quite rapid again, like over 500 points in a week.
Well, did you see that bull flag just completed there? We have
a few extensions right here. High 132s, 133, 15 is one. So I prefer to be flat just right now. See if we
nice trade came in.
I mean, he's been nice super trade. Bullish. Even yesterday. Well, I've been trying to follow along, selling yen, and I think Benedict in our chat room, he's like, hey, I'm getting long some sterling yen. I picked that up yesterday and played it to the long side. I mean, it was such a good move. I didn't expect to make 150 pips in intraday on sterling yen, but we're all just kind of following Kman around. He's been nailing this thing. But I mean, just look, you got out today. I bet you weren't even looking at this flag pattern complete.
No, I didn't see that one, but somebody in the room brought it up. So afterwards, I was like, well, okay, that comforts my my idea of going flat right now. The only thing I've got left, and that's a much smaller slice now, is the Canada yen.
Yeah, the Canadian yen has been. I mean, I know we talked about this on the week ahead video. About this massive breakout. That was, we closed the week there. I mean, we're what, 2 big figures higher in 3 days, and the euro yen broke out as well. I mean, that was in breakout territory. I mean, we're almost two big figures higher as well. You can see we're hitting a 127% extension. A lot of people, as traders, a lot of people tend to fade these moves because it's like, oh, it's at a big extension. But I want to make sure that everybody understands that doing that is dangerous with the yen, as it has been for the last several months. And the reason why I say that is because the Bank of Japan is not following in the same footsteps, and not even playing from the same, lyrics book and music book that every other central bank is playing right now. I mean, not at all. I mean,
you must have watched the Flow show this morning, because we spoke exactly about trying to pick tops and stuff.
I did not, because I finally fell asleep after being so warm last night. But I bet, I know if you guys don't listen to the Flow show, if you're up in European trading hours, you got to make sure you're listening to Ryan and Kman during those European hours. Let me go ahead and just go over to. You guys can get the link for it right at ForexAnalytix. .com. Just go to the Flow show. This is a free show that Ryan and Kman are on every day. How long did you guys go today, Ryan? How long did you?
I think it was near enough an hour today.
We just hung up before starting the F.A.C.E experience.
Oh, that's cool, man. That was you ran it really right into the. Hey, Ange that used to be in our chat room, she said I listened today. It was great. So I mean, and then every once in a while you bring in the Queen himself, Stelios. I mean, that's great.
Yeah, when he's not on holiday.
Yeah. All right. Hey, we only have a few minutes, but let's talk really quick. I want to go over to the ECB, because we have the European Central Bank coming out, and just in case you guys missed it, the euro just hit the 78% retracement. If you were if you're a ForexAnalytix subscriber, you got the last update was. The euro dollar is probably building a triangle consolidation ahead of Thursday's ECB meeting, which should find support intraday ahead of the 78% retracement at the 106.56 level. That was sent out 38 minutes ago. So the low was at 106.57, which is right at the 78% retracement. And as you can see, we've already bounced from there. The update went out 30 minutes ago. The bounce happened 15 minutes ago. So ahead of the bounce, ahead of the support we hit. Now, I do think that the euro dollar is going to be building some sort of consolidation, because we don't know what to expect out of the ECB. I don't think anybody does. I mean, I know a lot of people believe that the ECB is going to be, you got Christine Lagarde, so it's hard to really bet hawkishly with Christine Lagarde. But what is she going to do? I'm asking you guys, what is she going to do for this meeting? I mean, is she going to, and before I actually ask that question, just let me point out that the euro has been capped by this, daily trend line. It's kept us, in check all of 2022, right? That comes in basically at 107.60. So we are, as I noted in the week ahead video, we're probably going to consolidate and break out following the ECB on Thursday. You're going to get positioning, jockeying around these levels. I wouldn't want to be short the euro, but at the same time, you might be skeptical about being long. But what do you do? What is Theresa? I almost said, what is Theresa May going to do? What's Theresa May going to do for the euro? Just kidding. What's Christine Lagarde going to do? What do you guys think?
I think the markets are kind of convinced that the ECB will never be hawkish, and that's why I think the risk for a bigger reaction when they do turn hawkish is higher and higher now. I think with inflation above 8%, they can't ignore this problem anymore. They have to do something, and I think the RBA kind of proves that central banks are thinking and are doing faster in terms of tightening, because obviously they don't know how much they can keep tightening for before a big recession comes. So I think the ECB will have to tighten faster than the market expects. And I think a 50 for June, it shouldn't be dismissed. It's becoming a bigger and bigger possibility.
Wow.
Now, Stelios, I to be fair, this has been your argument since the beginning of the year.
Yeah.
So since the beginning of the year, you'd said to us, that you thought that at some, and this is a lot of you guys too. Like I'm pointing you out, Stelios, but I'm throwing you under the bus specifically. But this really goes for a lot of people on our team. Thought that the trade of the year of 2022 was going to be long euro. Now, since the beginning of the year, we've seen the euro drift lower, and the dollar, has really, reciprocated and rallied to highs. But is this the euro's time now? Is this, going back to the argument, maybe this is the trade of 2022 where the euro actually does go. I mean, look, we've already moved from 104 to 108. Well, I mean, we had a 4% move from bottom to top just over and that's a pretty aggressive move just over the last month and change. Is this the time that the euro makes it from 107 to 115 by year end? Based on your argument, it's possible, right?
I think it should. The problem is that markets don't follow logic too often. I mean, they should really. I mean, with fundamentals the way they are, they should. Oh, my dog agrees. They really don't have an option.
Yes.
They don't have an option. I mean, that's what they should be doing. Okay, I'm going to mute.
All right, but okay. Well, Ryan, what do you have to say about this?
Yeah, I think so. I've been building a long euro position. As you know, I'm long euro dollar from the low 104s. I'm long euro sterling 83s to 84. This, when we both Stel and I had the same view of the euro at the start of the year.
Yeah, I was going to only throw him under the bus, but I'm going to throw you under the bus too. I'm just kidding. Yeah. Go ahead. But
when it was sitting at 110, 109, we were saying on F.A.C.E, I'm not ready to buy it yet. I feel it can go lower, and lower it did. But we hit that big strong level. I thought 105 might be the decider. We cracked that, got down to that 103.40 level, those multi-year lows, and that's where we've held it. And that. I think the bounce that we got off there was more to do with the Fed setting out their stall rather than the ECB turning hawkish. So I think that's where we're at right now with the euro. The main bounce we had was that everyone knows what the Fed's doing.
Well,
now the ECB, it's their turn. Are they going to be super hawkish this week? Or are they going to try and dumb it down a bit and be mildly hawkish? Either way, I can't see the euro, going back to those lows, and unless they're, super stupidly dovish or something. But how high we go and how fast we go depends on how hawkish they'll be, and that's where we've got to judge it on.
Yeah, no, and I was going to say, I mean, if you're betting short euro, you're betting that this divergence between central banks is going to stay strong for a while longer. And when inflation is a global issue, and the supply chain issues, you guys might have missed this, but yesterday over the weekend I went to go. Trade balance coming out with in Canada a little worse than expected, a little bit improvement in the U.S. Just all that data just came out. This comes with ForexAnalytix, by the way. This is included. But one of the things I was going to say is that you know, like I said, I said it yesterday. I went to go buy a oven, you know, a double oven microwave unit for our house, and it's backed up for like a year. Like you can't buy anything. I mean, this is and so there's like massive demand. There was like 60 some people on the waiting list to get this oven that I'm trying to get, and it's I'm pushed out a year. I mean, that's a Target. What's that?
Get yourself over to Target.
No, and people. No, I mean, but prices have really doubled in the last year, and there's still a demand, right? So inflation is not just a U.S. issue; but it's a global issue. The supply chain issue is a global issue, and so
there was a story out today. Target, you know, we spoke about their earnings and how they built up all these big inventories.
Yeah.
Well, now they're stuck with them, and they've issued a warning that they're going to have to stop ordering from suppliers and slash their prices of stock. You know, so you know your inflation's gone out the window, and potentially if that's widespread, then you're going to see economic activity go out the window because your suppliers, your manufacturers of your ovens and your washing machines and that sort of stuff are now going to get hit because of all these inventory builds. So it's going to affect economic activity. So you see durable goods dropping. Now you start to see the weakness coming in, and then the market will question the hikes. But in terms of your oven, get yourself over to Target for a bit of a bargain, mate.
Well, apparently I should go to Walmart because Walmart's down 4% pre-market, as Paul Franco is saying in the chat room. And you can see we have a bear flag developing with Walmart. And so that if you're long Wally World, I'm just joking. If you're long Walmart, then you know the target technically takes us down to 98. Roughly, and I know Dale, you have Mr. Adam Button from Forex Live. He should be here, and I know you have an interview coming up. But I'm just saying, man, that's a ugly ass chart with Walmart. So, hey, great talk regarding the ECB, the RBA this morning, everything that's happening. I hope you guys had an opportunity to you know enjoy this conversation. Make sure you guys check out our webinar sponsor, our show sponsor, the Trader Funding Program. So if you want some more information about how to access, we just actually enacted the $1 million account size. We finally have greenlit that, turned that on. We have people accessing these real live trading accounts every single week. It's awesome. If you want an explainer video, just go to the very bottom. You can see that 2-minute video of me. So check out the Trader Funding Program and ForexAnalytix. All right. So Dale, it is yours. Have a great interview. Kman, Ryan, Stelios. I saw Steve popped in, even though we didn't get to hear from him. I hope you guys have a great day. Dale, have a great day. And cheers, Adam, welcome to the show.
Thank you, team.
Thanks, guys.
Adam, I'm trying to promote you to being the panelist.
Do you want me to help?
I'm locked from being able to do
that's by design. I'm just kidding. I don't know why that
I don't either. I'm trying to promote these people.
You know, Dale, we'll have we'll look into it. So
all right,
try to get that fixed for you. All right.
Give me a stroke.
Please don't stroke out on us. Thanks.
All right, and not after I talk to Adam. Maybe Adam, are you around? Okay, now you are. Thank you, Blake. How are you, buddy? Welcome back to F.A.C.E. Adam.
Microphone. Okay, Dale.
Oh, there you are, buddy. Okay, so
throw that on.
Welcome back.
Well, glad to be here, Dale.
All right. So did you want to? Oh, there you are. Okay, we can see you.
Yeah.
All right. You want me to put my charts up, Adam?
Also,
while we're
yeah,
going
if you
around.
want. That'd be
Okay.
best.
Okay. So great to see you.
Good to see you, Dale. Things are lively in the markets. Tuned into your conversation there just now. It's an interesting day.
Yeah, and ECB. I'd like to start with Adam. If you really think that what we had in the euro was more than just a short covering rally from 103.5, could this be just a consolidation? And if the ECB disappoints, a break to buy?
Well, I look at the RBA today. They come out with a 50 basis point hike, and we rallied for 10 minutes and gave it all right back.
Yeah, there it is.
So I don't know if you can really use that playbook tomorrow for the ECB. I think the market's telling you it wants to buy dollars, sell yen. And the central banks, maybe that if it's 50 now, 25 now, we're looking at terminal rates. And maybe a little bit more hawkishness now leads to lower terminal rate. So that what I mean by terminal rate is the top end of, I sort of explained it to others, but
and also haven't they been moving the timeline of when we get to that terminal rate has been moving closer.
Exactly. And then, and central banks talking about maybe easing afterwards, so the RBA talking about, inflation falling back down later, or Bullard, even the Fed hawk saying, okay, maybe if we hike, and he's talking about some pretty aggressive hiking, but then maybe cutting later. So you start to think about, okay, what are the mechanics of the next move after we get to this terminal top? So, I sort of sniffed out an Aussie, something a bit more hawkish, and I wouldn't be surprised if we see the same thing out of the ECB. We look back at these global central bank get-togethers, and it's almost like conspiratorial. But they pivoted; they got back together in March or April, and everybody's been more hawkish since. Now, they moved together in general, so it's not necessarily that they had a meeting, but over the last 10 years, we've seen a lot of this. Where you get these paradigm shifts out of events like that. And, perhaps it was the Bank of Japan saying, hey, listen, we're not going to play ball. I think they got together and said, listen, we've got an inflation problem. And we have to tackle it together. Because if you have, everything's global now.
Why is it?
Supply chains are global, demand's global. And if you have just one, if the Bank of Canada, say Canada has an inflation problem, if they were omnipresent and saw this brewing ahead of everyone else and had a hiked rates to 4% in Canada, it really wouldn't have made that much of a difference for Canadian goods prices because everything's imported. So if everyone's not doing it together, it doesn't really work as well. So everybody came out and said, we're going to do this. Japan said, no, we've been fighting.
What's their resistance to it, Adam?
Well, listen, I'm shocked. The data comes out month after month, and I don't understand how Japan doesn't have more inflation. They import everything in terms of commodities.
Yeah.
The latest data has been ticking up. I think in Tokyo, they sort of report a month ahead of the rest of Japan, or a few weeks ahead of the rest of Japan. It's 2.5% year over year. So that's something in Japanese terms. But you have to assume the prices there are going to go up, same as everywhere else. I mean, it's staggering to me. But I think that's the trade once it happens, right? That's the big headline of the next few months, is that Japan says, okay, we're done with the craziest quantitative easing in the world. But until then, and the market's just screaming, sell the yen. I mean, it's day after day after day. Good risk appetite, bad risk appetite. I mean, the rest of the equation just doesn't even matter. I thought we maybe
the other correlation. Sometimes it pressures gold, maybe again, but I want to comment on this. You believer it's a pretty tight correlation between the U.S. dollar yen and 10-year yields?
Well, it is. It's there, right? I mean, we're not at new highs in yields, though. I mean, 320.
So
320
which one's
was
right?
high.
Yeah, that looks like a. Yeah, what do you think?
So is maybe dollar yen's leading it? Is that? I can't believe that. I mean, I think you just have this independent yen weakness on top of it. So that's probably half the equation. I mean, you can see the sort of the daily direction is there. I mean, if we look at the last, what are that, 6 or 7 candles all higher, although not today, right?
Right.
And yields moving up. So I think that trend is a nice sort of confirmation. If you were looking for
it's a first divergence where the yen has made new highs without the 10-year doing it. Because back here it did a month ago when the yen was making new highs. This is the first time it hasn't with the yen advance.
And you know, if you're probably just looking for the one-way side of that right now, right? If the trend's higher in dollar yen, the trend's higher in yields. We had those 3 doji stars. Maybe that was the time to sort of look at it. Same kind of thing in dollar yen. I mean, again, I thought maybe we'd get a bit more of a retracement. That was a pretty big move in March to May. And how much did it come down? 130 to 126?
Yeah, this was nothing. It was more of a time correction.
Yeah. And the power of this move coming through right through the top, right? Barely slowed down. And I think, you know, I don't know. It's one of those things where you look at it and said, why am I overthinking this? I mean, there's some sort of imbalance here. You know, a bit of jibber jabbering from the Bank of Japan or the Ministry of Finance in Japan to try to slow down, but they're, you know, they don't care. They're an export oriented country.
Yeah. I mean, and great call. I remember you were bullish, you know, the Canadian and the Aussie. And so the commodity currencies continue to reign, but even they, when I look at the Aussie here after the RBA, so it looks pretty vulnerable for at least, you know, some give back here of this advance.
Yeah, you know, you kind of hope we're in an era of sort of central bank divergence, central bank driven, old fashioned currency market. You know, you go where the central banks take you, maybe get one of the, you know, when we had Aussie rates at 7%, you know, some real carry. And now
when you were a child and I was in my prime. Those FX markets,
those when you have real divergences, right? Like real carry, and you think it would be developing, right? 50 basis points here, 25 there, but it's just not materializing in that way. And you know, maybe the technicals play a bigger part, or we're looking at China. Seasonals, I know you like when I talk about seasonals in June are positive for the Australian dollar. I mean, we're kind of started out that way. But back to about flat here now. I'm interested to see how this shakes out. You know, maybe we hear a bit more from the RBA, and get, you know, you have to assume that they're going to be a bit more hawkish going forward from here, regardless of what they say. So, you know, let the dollar's really on the boil here. Allow me the dollar yen flows working into that, or maybe we wait till after the ECB for it to shake out. But I do like the Aussie. I mean,
on the long side.
And you mentioned CAD.
Yeah, and CAD. Commodity currencies are way ahead. If the dollar has bottomed, I mean peaked, and the euro's bottomed too, I mean, the advance is definitely, if you look at relative strength, led by commodity currencies.
Well, I got to wave the flag a little bit. CAD is the best performer this year.
Yeah.
And that is with the housing market that's, I mean, really coming undone here. So
let me get my violin.
I don't think the market really cares about it yet, and I'm not sure why. I think, you know, there's there's a lot of bearish talk.
It's probably denial, though.
There's a lot of bearish talk about housing everywhere, and I really openly wonder, okay, what happens? Say your house goes from like 500,000 or 600, say in 2 years since the start of the pandemic to $1 million, and then go back to $800,000. Do you really? You know, is that really that much of a wealth effect or spending effect or trickle down effect? Like, for sure, you have less flipping in real estate and everybody kind of lost $200,000 of wealth, but you'd think that'd be negative, but I don't think a lot of people borrowed against it. So I'm just thinking about that out loud. What do you think?
Well, I think that if they really want to take the housing market down, they should change the laws of interest rate deductions. And I think you'd see a lot of supply hit the market. Yeah. I think right now people are in at great rates, especially the past couple of years. Even if they lose appreciation, where are they going to go?
Well, I'll give everyone a little bit of a lesson about exactly where you're going to go. About Canada. So we don't have interest rate appreciation, and we don't have 30-year fixed loans.
Everything's you don't write off interest.
Can't write off it. Not like in America.
Okay.
And so everything's on either variable rate loans, which is about a third of the market, or 5-year term loans. So you can get a 5-year fix. So that, you know, we have 20% of mortgages resetting every 5 years.
Okay.
Or every year. Sorry. So people will feel it. and they're going to feel it a lot. I mean, the Canadian 5-year in the last, I think, 10 days is up like 130 basis points or something crazy like
their
that.
payments are going to be up, what, 25, 40%?
And house prices in Canada, I mean, I'd say relatively are probably double what they are in the US. You know, if you take kind of the same town, adjust for this and that, it's insane. So, I mean, like I talk about $1 million houses, they're not impressive houses at all anywhere. And it's not just Toronto, it's everywhere.
Right.
And you know, if you're paying 5% on $1 million house, on $1 million mortgage, it's 50 grand a year. That's a pretty big hit to discretionary spending. But the market doesn't care about that. Sort of, I maybe spoke too long on that. It seems the market doesn't care about that. You know, we had trade balance out just now for Canada. It was a little soft, but it's going to be very strong. And I think the market right now is just looking at oil and saying, this is a runaway train. You know, we talked not that long ago, and I said, listen, I'm bullish oil, but we've got China locking down. We've got worries about a global recession that are very real.
You brought up, we were talking about China lockdowns before the Olympics. Okay. So, you know, you brought it to my attention. The one thing you were worried about were the lockdowns. Did you get the market effect you thought you would get from the lockdown? I mean,
that's sort of, I mean, in a way you kind of snag, you know, you had to wonder how central banks would respond to it, right? So you kind of snarl supply chains again. It's a bit more inflationary, commodity prices. But one of the things you would look at and say, listen, oil's got to be pretty vulnerable. I mean, Shanghai not driving. I mean, China probably took, I don't know, 1 million barrels a day, 1.5 million barrels a day out of demand.
And the market kept drifting higher.
And so if you were to construct a bearish case for oil over the last couple of months, with an SPR release, more OPEC inventories, China lockdowns, global growth fears. And what happened to oil?
Yeah.
I mean, it's unbelievable how strong oil is going to an all-time high. I mean, Goldman's out today bullish and Kramer's bullish. So take that for what it's worth. But
how about Gartman? Is he long of oil or short of oil? He was using
in terms, in yen terms, I think it's a good trade in yen terms.
No, in shekel terms.
Shekel terms.
Yeah, converted for me. All right. So what about the schizophrenia in the metals? What do you have seasonals here in gold and silver?
Yeah, not a lot going on there in the seasonal trade in gold. There's really that start of the year, you're supposed to get the strength in gold. Yeah. You kind of did. It's come out now. The dollar's very strong. And if you are to, point out that in other currency terms, gold has been a pretty good trade. I mean, if you were in Japan, you bought, maybe not as good as just straight dollars, but you look around. I mean, that's a geopolitical trade. You think there's talk now, Russia trying to secure more gold.
Yeah.
It makes a lot of sense for current, enemy or not unfriendly nations of the US to be trying to invest more in gold. And so there's a tailwind there. It's kind of holding up, but it just isn't capturing the imagination of anyone. And I think that's what needs to happen. And I kind of have a hard time seeing how it does.
Okay, here's how. Because everyone's still embracing that the dollar's still good and we're going to blow to new highs. But, this rally so far doesn't look that great to me. And if yields are peaking here, up here, I think this could be a failing rally in the dollar. And, I think gold's more of a monetary hedge than an inflation hedge anyway.
Well, and, there's a lot of that going on.
It's got to be about the dollar. If we're going to have a bull market in gold and silver, it's got to be about a dollar issue. That's the way it looks. And no one's embracing that the dollar has peaked yet, even though we had one sell-off. This is a break to buy to 110, right?
And I think, you look at this sort of years ahead, and this isn't a minority position anymore, or nobody's talking about it, but the commodities do look really, really good.
Yeah.
And, whether it's gold, whether it's anything,
especially the ags.
The ags are unbelievable. I mean, I think they come off a bit. It's not entirely my cup of tea, but even metals are holding up pretty well for what we've seen, similar to gold. I mean, copper did come off, but copper could be even more sensitive.
Yeah. And there's beans. And
Beans.
there's corn.
Beans in
and
the
there's
teens.
wheat.
Oh.
So I think you get any kind of strong break in these, you got to own them, don't you think, Adam?
I mean, there's
Fed can't
this
print them.
sentiment now that, okay, they're going to find a way to get Ukrainian wheat out of the country, but this is a tough one. And you hope they do.
Through Russia?
Through Belarus, maybe? I don't know.
No, I mean, aren't the Russian troops going to bring it into Russia and then ship it to us?
Well, you mean, I mean, in the East, I listen, I don't know all the mechanics of that. And the ports, it seems to me a difficult one to fix. They mine their own ports. And I mean, what do you expect Russia to clear those mines? Or I don't know, they'd be shooting at each other. So I don't understand how it's supposed to get out of their ports. And this war is escalating, right? They're talking about bombing infrastructure now, Russia. Yeah. They're not doing it already.
Yeah, it is escalating. Where do you think we're going? It's not going to be a stalemate?
I think, it's just the length of it is the only thing you can look at and say, well,
what a waste.
Well, and it just seems like I don't see an end to it. So it's just indefinite at this point. It doesn't look like Russia's making this slow advance. So that's progress. Ukraine's not losing territory too badly. So maybe that's okay with them. Nobody looks like they're at their breaking point.
Only one that's helping out are the defense contractors.
Yeah, well,
President Eisenhower, man, you called it, buddy. The military-industrial complex, man. Huh? Okay, so let's go to what's new in the world. Fairly new. They recently connected it to NASDAQ, but NASDAQ rallied last week without Bitcoin. What are they going to say it is? I know people just say it's a commodity.
Yeah, they're trying to pin it down on the regulation. And I can kind of see what Congress is saying that, well, we want to be innovative, but we need investor protection. And they just don't have a framework for that. And then you read the stories.
How are they going to get that done? They can't get anything done.
They can't get anything done. And but it didn't come back with tech, which is that's tough.
Yeah, that's what I mean.
And you have a lot of the kind of gurus been embarrassed a little bit with some of the Luna stuff. And, people are licking their wounds. Technically, you would have thought you'd get a bit more, like even if you go to a daily there.
Oh, and the Bitcoin.
We tried a couple times, even yesterday, to go again, and look at that rejection. I mean, that's to last week and then again yesterday. And
thanks for having me go to the daily, Adam, because the RSI is confirming down here.
It's not breaking down, but it looks like it kind of could break down here, right?
Markets don't bottom with a 24 RSI without any divergence. That low's going to be, we're going for it. So if we're going for it in there, maybe does the NASDAQ and S&P link up with it during this last push up in the bonds? Because it looks like the bonds are going to make a new high. So isn't this kind of an acid test with rates pushing the highs to see which markets hold up the best under interest rate pressure?
Well, that's it.
Isn't that
are we really going to change the trend here in June? I mean, let's take a step back and say, okay, central bankers are all hawkish. Energy is bullish.
Yeah.
Yen is fading.
Yeah.
The economy is having an inflation problem, probably near a peak. But it doesn't mean it's going to go down to 2%. It might just fade back to 4%, which is a problem. So we don't know where that's going to go. Rates. Is 320 the high in 10? Maybe not. Now, you kind of held your back above 3. So, and if you do get above 320, you're going to need a big flush. And you look at some of the charts on stocks, big tech stocks, there's a lot of room on the downside to fall. So, like you said, even with Bitcoin, is this how a market bottoms? I don't know. Usually you need the Fed, you need something. I mean, I don't.
There's Microsoft and
then what does oil do? I mean, we got these refining margins blowing out. The pump is is bad. You know, elections coming up. They're going to have a divided Congress or divided whatever administration in the U.S. So, you know,
and Biden's going to be lame duck, which he was anyway because of
and so now you know, is there any, you know, and then I think maybe at some point you probably look towards a Republican administration in 2024 and say, well, that's going to be a clean sweep, and then they'll be probably cutting corporate taxes, and you know, suddenly deficit spending probably won't be such a problem anymore to get the economy out or whatever. That trade is probably 2 years away, a year away. And then you have Tesla up there. I think the tide has really gone out on Elon. Like the cult of Elon, I feel has kind of eaten
the Twitter
itself.
bid was it.
It doesn't look so smart on that, eh?
No.
So
he'll make it look that way. But
if he, you know, listen, full credit. If he can get out of that one,
he's without Teflon too. So, you know, we're going into the summer, a couple weeks left of the spring. What's your eye really set on for, you know, how you're going to capitalize on what may be? Do you think it's going to be a quiet summer, or we're going to have some action?
Yeah, there's really two trades I like. I like oil a lot. Gas to a lesser extent, oil drillers, like contract drillers, oil servicing companies. I mean, there's going to be a lot of spending going there. Because it just looks unstoppable right now. I like U.S. housing here. I think we're talking about price decreases. We're going to see it flatten out, and I think the trade on it is lumber mills. Lumber mills.
Lumber got down to 600.
Come down, I think, but if you look at home builders, I think that's probably for the average trader maybe a better take on it. One of those, the lumber mills, or I mean, it's 600 lumber is still 100% higher than
goes the futures market.
I mean, 300 used to be a high price of lumber. So if
I was on the floor, I handed orders to those guys in the lumber pit on the old day. It was a click, buddy. It was a country club pit. You would not believe it.
I think the volume in lumber now, it's insanely low still.
It was. It's
an interesting market because I believe there aren't enough trees out there for the long term. But that's sort of a long-term secular trade.
They don't care. They just want to run your stop.
Fair enough. I mean, if you're trading something
the only paper they used to care about was the paper with STP at the end of it.
Nice.
Okay, buddy, because that was liquidity for them to take the other side. So, Adam, I hope you have a great summer. Really appreciate your time and everything, buddy. You know, future Forex Live, you guys are doing it. I see you're really doing a lot more on the education front, a lot of webinars, and you're one of the best news traders I know. Give me a piece of news we don't know about yet that we're going to hear this summer.
Yeah, you know, I touched on it. I think it's Japan when they make the turn, but I think we maybe get a blow off top in dollar yen like 145. I mean, it's starting to look that way. It just goes almost no bid in the end. So that would be the turn. And then for this week, I think the ECB being more hawkish. I don't think people have appreciated enough how they're hearing from the 8% inflation in Germany. Are you kidding me? You can't say we're slow rolling in from here. You know, so
you sound like Stelios, one of the guys.
But I don't know if it's that bullish for the euro because the economy is just garbage in Europe. And you listen to leaders there, and Lithuania, I think it was, maybe Latvia. Sorry to mix them up for anybody from there. It's typical gringo move. But, you know, they came out and said, you know, it was about the Ukraine war, but they said, you know, it's only money. It's only money.
Yeah.
And you think, man, do I want my leader saying it's only money?
Yeah.
You know what I mean? Like, I get the broader point of what they're saying, but, you know, we need to do more. It was about the oil ban. So well, we need to ban oil. We only need to pay another $10 a barrel for oil or gas or whatever it is. You think, do these people even care about growth? You know, do they even care about the average person, let alone the average Lithuanian who isn't very wealthy to begin with? They can't pay the bills.
Yeah.
You know, and I think at some point they turn on them. because they say, listen, we support Ukraine, but I can't pay the bills here. Yeah. And I don't know how long we are away from that, but I don't think
I think it's already happening, Adam, in the U.S. And, you know, put that together with bull market and housing, with people who can't afford because they've been squeezed on rent and everything else, take care of a family. And you're right. There's a lot of that here in America.
Yeah, it's only money. And nobody says that in America. Biden doesn't come out and say it's only money. Get out of here. So I think they're just so far out of touch in Europe. That's just this elite class that just wants to do everything green, and it's horribly misguided. Listen, I'm the first guy to want to electrify everything, but you got to do it right. You can't impoverish people to win a war in Ukraine. You can't impoverish your people to green everything. It doesn't work. They'll get angry. Yeah. So I think that's the where we're at. So I'm not ever buying the euro.
You know, I have a doctorate from Hard Knocks University, and I completely agree with you. Ever hear of Hard Knocks University?
Yeah. It's you made it out. You made it through the school, the regular school, up to the higher education part.
Yeah, and what a blast talking to you today. Really. And we're going to have some action this summer, and keep in touch. And everyone, you got to follow Adam on Twitter at FX_button and see him do his thing on Forex Live with Greg and the rest of the team. And one of the best in the business, Adam Button, my trading warrior brother.
Thanks so much for having me on, Dale. Appreciate listening to you guys earlier.
All right. Thank you, Adam. Everyone, they're all thanking you, Adam. Thanks for your time today, buddy. Okay, that's a wrap, everyone. I hope you guys have a good day. Don't just count your pips, count your blessings, and you could join the team, the dream team, in 14 minutes on the morning edge. Adios, my trading warrior brothers and sisters.